ready? Are you ready? Let me hear you, motherfuckers. Go ahead, do the hype train, Amit.
Maybe I should have been an announcer for like for the WWE or something.
Right, for like the Mexican backyard wrestling.
All right, hello, welcome everybody to another episode of Finance Junkies. We are here. We got Kelly in the chat. I'd give Chris all my money. We've got Ray in the chat. One too many oysters. Totally different comments. When is Finance Junkies going to the main channel? Melanie, September.
That's a good question.
September will be.
Yeah, they were both admiring and trashing your thumbnail skills. Like, you gave me the longest nose hair ever. I still look like I'm a cancer patient. Like, there's a lot going on, dude. Chris looks like he's looking for some seed money.
Oh, my God. Michael, John, Hawk, Rajan, thank you all for being here. Martin Pilda, Sonam, Ahad, Christian. All right. So, on today's episode, Chris is not going to be here today. He's actually not going to be presenting the bull case yet for Disney because he's still in Mexico and his flight got delayed. But fear no more. We have someone who's going to present the bear case for Disney. And Carlos and I, Vitaly should be here in like 5-6 minutes, are going to basically try to understand his bear case, try to understand what he's trying to say, and see if he's got any juice behind his argument. Yesterday, we ended the episode saying we're kind of neutral on Disney. Like, we're kind of bullish, kind of bearish. It could go either way. Carlos is a little bit more bullish, thinks it can get to like 125-ish. So the guest we have today will be giving us the full-fledged bear case, and then we'll be going from there.
Whoa, what's happening?
Yeah, that's but that's not just me, right? I was like,
that's Palantir software.
That's crazy, bro. Everyone sees what's going on with the Carlos' screen?
I'm freaking out over here. Let me see.
That's hilarious. Yeah, that's kind of wild. All right, so while he's getting that fixed in, let's first of all, these Fitch credit ratings, this is a nothing burger. Okay, in 2011 we got our credit ratings reduced by Standard & Poor's, and that was actually bad. The S&P declined 15% the day after. Janet Yellen says the Fitch thing doesn't really matter. So for those that don't know, we went from AA plus ratings to just AAA, which is technically meaning the United States is bad if you borrow from us because we're more likely to default. But I've heard it's a nothing burger, so it shouldn't be that great. But we'll see. I mean, that futures are down right now. S&P's at 454, so that's kind of the main reason why it's down. All right, so the guest we have who will be presenting the full-on bear case for why Mickey Mouse will not continue to reign supreme over the youth, Mr. Dividend Streams.
Dun, dun, dun. Breaker of narratives.
Hello, Carlos.
What's up, bud?
Steve, so you're a frequent CNBC contributor.
Don't say that because I'm not.
We know that you do a lot of due diligence. For those that don't know, Steve has a Seeking Alpha, and he's making like $700,000 a year from his Seeking Alpha articles. It's actually insane.
Don't say that either because that's not true. But
that's why I'm saying it, because it's not true. If I said the real number, I said the 1.2 million number that you keep telling me in the text messages, we can get into some legal issues. So I'm not going to say the real number. But he's bearish on Disney. Now, before we get into it, Steve, high level, do you think Disney stock has more room to fall, or do you just think it won't get back to its kind of 135, 150s levels?
Can you bring up a chart while he's talking?
Yeah.
Can you bring up a chart while I can?
So that's the question. Do you think it goes lower from this level at 84, or do you think it can get back to like the 150-ish? Or you're just bearish it doesn't even get back to that level?
I wouldn't be surprised if it goes lower. I wouldn't be surprised if it goes higher. For me, it's a different question fundamentally. But I mean, I could see it going either way. It's not something that I am personally invested in. And when I think about where I'm going to put my capital, Disney does not pay a dividend. So I need to make an argument that it's going to appreciate more than other stocks, and I can't get there.
Okay, that's fair.
What about them reinstating the dividend? Would that change your thesis at all?
Maybe, but I put together some stuff, and Mick called me when I was smoking a cigar earlier, and I really didn't have much time to put everything together. But yeah.
Okay.
Should I just say that I think the magic has left the kingdom, so to speak?
This is why you get paid from Seeking Alpha. You get those big titles, and you make people click. Big Ray, thank you for this $5 super chat. Steve is just mad Michael Jordan didn't let him play against the Monstar. That's funny.
MJ's the greatest
of all time.
Kobe's second.
And then real quick, let's do this super chat. David B, thank you so much for this super chat. Let me ask you guys this. Let me ask you this, buddies. If there was a mediocre Sugar Ray cover band, which one of you has what it takes to be the lead singer of that band? Amit Vitali versus the other guy.
Yeah, I guess I'm now the other guy. First of all, I would never join a Sugar Ray cover band, and I think people would be surprised if they heard me singing.
Okay, I don't know what Sugar Ray is.
You don't know Sugar Ray, dude?
No, I thought he
Look
was
him
something
up.
like Sugar. Is it like a serious? Is that a big music thing?
How long? Oh God, what's it? What that song? I just wanna fly. That was like his big hit. It was
Yeah, but
like,
amidst
you're probably like 2 years old.
I was born in '97 when it came out.
Jesus, dude.
Yeah, Carlos, how old are you?
How old would you guess?
I think you're my age. I'm 42.
No, I'm actually older than you.
Okay.
46.
Okay, we're in the same ballpark. I mean,
Yeah.
you and I remember that song vividly. I mean, it was,
Oh yeah. That was like was it TRL? It was like a smash. TRL was a show in the like 90s, 2000s. Admit.
So, Amit,
but they played music videos.
I get into the numbers. Let me just frame why I am skeptical about Disney.
Okay.
I think, and Carlos is a parent, I'm not, so I would really enjoy his insight in this. I don't think Disney has the same relevancy that they had in the 80s, 90s, and early 2000s. I mean, look, when Carlos and I grew up, there wasn't a lot of options for kids' entertainment. I mean, the Disney Channel was one of the meccas.
Mm-hmm.
Mickey Mouse was hugely relevant, Winnie the Pooh, all those characters. Like the Disney universe was huge. Today, there are so many options out there. I was with my nephew. He came over today with his father, and he's 7. And I actually asked him, and he doesn't really watch anything on Disney. He's all about YouTube and watching stuff on YouTube and playing Roblox. Now, back when we grew up, there was not the streaming options. The online gaming didn't exist. And there was just, you were confined to Nickelodeon cartoons on Saturdays or Disney. It was just
reruns of Warner Brothers, Tom and Jerry, Bugs Bunny.
Today, there's a lot of different options. And I think that there is no shortage and the market is saturated. And it's very hard for Disney to regain the relevance that their characters once had. I mean, our parents' generation knew nothing but Disney. I mean, now, are kids really that crazy about Mickey Mouse? Or are they more into Roblox, Poppy Playtime, Rainbow Friends, all that stuff? SpongeBob, I don't know.
I still have like my heart out around 5 to go pick up my kid. Maybe you guys will still be on when I get back. But I did so. I don't know if you want to like make the entire bull case, or if we could just like interject and maybe have some counterpoints to what you're saying right there.
Yeah, no, I'm interested as a parent what you think about what I just said.
Me personally, as a parent, until I see a sort of like depoliticization of like Disney and its theme parks, which I have some links actually to show about why I think that's going to be happening. I personally will stay away from it. But my argument against what you're saying is there's a lot of adults that go to Disney right now. I mean, look, it's even someone in the chat right now just said something like this. Someone spent 70. Yes, who was that? Rob Ferreira, 439. My coworker just spent $7,900 on a 1-year pass for his whole family. This is it's a destination. A lot of parents that grew up with that, or kids that grew up with that, now take their kids there. And I know a lot of adults that is that's a pastime for them. I have friends of mine that are like in their 30s that actually have entire YouTube channels built around the different theme parks. And
from the theme park aspect, I completely get it. I think from a destination, look, there's not many destination type places like that. So I think that'll always be there. I'm just thinking around the content. I think it's a lot harder for them with this environment of having so many options out there to gain the amount of time that children used to spend on Disney than they are now. And look, Jordan said it best. Everybody buys sneakers, so he stays out of politics. And I think that's the best approach for public companies.
Steve, can you move your mic a little bit closer?
But they also I mean, have you looked into the cruises? Like Disney has so many different arms, and just even in their merchandising, and they've now built, from the time that we were kids, you have 30 more years of new characters for people to fall in love with, while still monetizing the old ones and revamping them. A lot of them haven't been successful as of recently, but that's the politicization aspect, which I think they're not stupid. They understand that if they continue to go this route, it is doomsday for the company, and a big change is needed, right? And that's one of the reasons why I think they pulled Iger back out of back out of retirement. And then I'm also curious to see what your thoughts are of this Apple partnership. I think it's more than just putting Disney content on on the Vision Pro. That it's a sign of a deeper relationship, and having Apple as a partner is never a bad thing.
No, it's a great thing. So, Amit, let me present, and I want to go.
And real quick, Steve, I think part of framing your bear case is that if the content is irrelevant, the parks will also be irrelevant, right? Because the content's what's the top of the funnel that drives people.
Look, the content's not going to be irrelevant. And look, they made Frozen. They make things that people gravitate to. And I think the parks are always going to do well. But let me go through a couple of these slides real quick. So from May 2021 to June 2023, 2 years, 1 month, Disney was at 1% of the Nielsen gauge for U.S. screen time, and they got to 2%, but they're just not there when you have Netflix at 8.2%. YouTube is the number one at 8.8. I mean, there's just so many options out there. This is one of the things that scares me.
Can you just go back to that chart real quick? I just want to get, so this is the share of U.S. screen time on a daily basis, people 2 and up. So you're saying on a daily basis, this is how people are spending their time, like on their mobile phone or.
Yeah, this was in Netflix's SEC filing from Q2. So that's where I pulled this from. So I did not make this. So I'm hoping that these numbers are correct. I mean, I would think they are.
Right. So out of the 37% of screen time that people are having on a daily basis, Disney is making up 2% of that 37%, which is an even smaller percentage of the whole. Okay.
They're making up 2% of the 37.7%. Yes.
Damn, no one cares about The Mandalorian.
I mean, it's just, and that is exactly why that number scares me, because they own Marvel, they own Lucas, which is Star Wars. That number is very surprising to me. And that makes me think their IP is not as engaging as it once was. And now the numbers behind the company scare me.
Real quick, though, does that account for theatrical? Because none of those other ones, Hulu, Netflix, YouTube, none of them have any access to theatrical. So if you add that into it, like if someone's sitting in a movie theater, they can't be watching Netflix, right? So even though the movies have been doing bad, they're still getting people in the theaters.
Yeah, I have no idea. That could be part of broadcast or cable, or maybe not.
Cable stream, right? So that's just digital, right? Okay.
I don't know. So 2018 was Disney's most profitable year in the past decade. It's 5 years ago. And they generated $12.5 billion of net income and $9.8 billion in free cash flow. They had a gross profit margin of 45%, profit margin of 21%, free cash flow margin of 16.5%. Great numbers. Love it. You're telling me that looking at the trailing 12 months, they increased their revenue by $27.5 billion, 46.5% more or less, and their gross profit only went up 7.6%, and their net income went down 67%, and their free cash flow went down 85%, and their margins on profit went from 21 to 4.75%. To me, that's a problem. And this is with Disney owning Marvel. This is with Disney owning Lucas, all the cable networks that they own, ESPN. I mean, I think they own ABC, if I'm not mistaken. They own a lot of IP on the cable side.
They own it. Yeah, they do. They own ABC now. They own Fox. Fox, and they're shifting people around at each of the.
So that's a problem for me. If the numbers represented 2018 with that growth, I would definitely be. They are super undervalued. The fact that they are doing that they are putting up these numbers, and they're coming out and saying that they are looking for a new strategic partner for ESPN. Who knows what else they're going to be doing? It makes me think that some of that stuff has problems. But if they spin off ESPN, if they spin off some of the cable networks, their revenues are going to go down. Their gross profit's going to go down. Now, maybe margins increase, but I would think the free cash flow and net income could possibly go down unless those individual brands are losing money, which they didn't say in the quarterly filings from Q1.
So you don't think Bob Iger can do something like pull a hat trick with splitting up the brands?
I mean, he may be able to, but I'd like to see a plan first. Like, I wouldn't be putting my money into this without seeing what the vision is. And by then it may be too late because Disney's a storied company. But To me, the
Also,
numbers
in
are
those years from 2018 to 2023, what you are seeing there, and I would count some of this to just the general disruption of cable television. Cable television right now is at an all-time low, and so if a
correct.
majority of if a majority of the money that was generated was from that monthly cable bill, and that is declining. Yes, they do have to find new ways of monetizing the same assets, and that's not something that companies like Netflix or Hulu would be a part of because they weren't part of that model, right? So you are seeing this money shipped away from them, but it's not to say that all the dollars that left Disney went to one of those companies.
Correct. Hey, Vitaly, what's going on?
How's it going?
So, and you bring up a great point. That's why I put the slide with Netflix in there, because Netflix doesn't have parks. They don't have any of that stuff. They're purely streaming. And $1 of revenue is $1 of revenue, $1 of profit is $1 of profit. Doesn't matter how you generate it. Disney has all these other assets to monetize. And Netflix is generating a third of the revenue and a little bit less than a third of the revenue, and they're generating slightly more profit and way more free cash flow.
Netflix has the same profit as Disney.
Yeah.
More
On a
profit.
trailing 12 month. And they don't have parks. They don't have any of that stuff.
That's a little bit crazy. Look into the free cash flow here. Crazy.
Yeah. That's another thing.
Yes.
But that to me is an underutilization of all of their assets. I think they grew too big too fast. The other thing too is COVID threw a lot of these numbers off, right? So it might take a few more years to see this thing settle down. But
maybe. I mean, this is COVID started Q1 2020.
Yeah.
This is Q1 2023 through Q2 of 2022. So maybe a little bit. Maybe parks hasn't ramped up enough, but I think travel, and the thing that I should look at is I use the TSA, their annual daily metric for flights to gauge travel. I did not look at that for this. I should.
Right.
Dividend's been eliminated. So obviously it's never good when a company eliminates the dividend. If it came back, it would be a different story, but I'm not getting paid to own them. And I broke it out from Disney's Q1 presentation, their media entertainment distribution, and then parks. So parks has a 27% margin, which is great, but I don't think that this Disney media is working. I mean, okay, they generated 1.1 billion in operating income, but it has an 8% profit margin. I mean, that does not make sense to me.
Well, that's why we have to know. Do you have data on what they're spending their money on?
Hold on. Before you say, look, they
that's
generated 8% profit, how long did it take Netflix to actually make a profit?
I don't know. We could look at.
I'm just saying it took a
probably a
while.
decade.
We all know it took 10 years. So the fact that Disney can generate a profit right now, even 8% after a couple of years of doing this, it's a sort of a testament to how everything that's helping them do that, because they have the content, they have the relationships, they already have all of this stuff. So it's really for them to fail. It's easier for them to succeed than it is to fail in the end. It's just going to take more than 3 years. So
they also have a ton of money that they're paying for licensing a lot of the older content, which they're starting to get rid of. So it seems to me like they're just a bloated company in terms of their expenses. And if they just eliminate the expenses and eliminate people, yeah, it's a one-time thing. But I think those numbers would look a lot better. That's one of the reasons why they didn't bring it back.
To answer Vitaly's question, I'm not sure what the last decade was, but going back to 2013 is all I can see on Seeking Alpha. Netflix has been profitable since 2013. Now, in 2013, it was $112 million, and that it didn't really start growing until 2017. So yes,
when did they start streaming? Because Netflix was just a DVD business for a long time. They started.
I think 2011, 2012 is when they.
And the other thing too is when they started streaming, no one took it seriously. It was very much like Tesla. No one took it seriously, so there was never any counters. They just kept laughing it off, denying it, and then at some point, it was like, oh shit, this is going to destroy our business, right? And so they had that first mover advantage, and they were able to operate. I mean, had any of these companies done the same thing at the time of Netflix, they might not be the juggernaut that they are now.
So, like I said before, if it's not paying me because I own a lot of different dividend stocks, I have to be selective with where I put capital because it's no longer an income play. So Disney's got to be a top 10 idea for me to invest in it. I mean, it's got to take a spot in the portfolio. When I start looking at other plays, it becomes because this is a capital appreciation play because it's not paying a dividend. Where's my money going to grow? So I looked at different companies, and I mean, if you look at price to free cash flow, it is crazy. But you look at their forward PE, it looks very reasonable and even cheap looking out to 2024. So, I mean, look, I like price to free cash flow, but I also respect the forward PE. The problem that I have with their forward PE is if they start selling off assets, how does that change? So I don't know. I mean, these are based off the consensus and the analyst consensus marks, but if Disney delivers, it is certainly an inexpensive stock from there. But look, I like Enphase more than Disney at this point for the simple fact that, and Vitaly was in the chat last night, and I think he was in it when I pulled up BP's estimates for how much wind and solar is going to be installed in the next 2.5 decades. And there's a huge runway. You need batteries for all the capacity that's going to be installed. And paying 24 times Enphase's free cash flow when they're expected to grow earnings 33% through 2024, and there's a huge runway of growth, I think Enphase runs a lot more than Disney could.
So I think you hit the nail on the head.
20
The
billion,
fact
22 billion.
you hit the nail on the head in the saying that Disney is an interesting value play if there's nothing else that is of value to bet on right now. And the problem with this, I know Chris is going to have his own thing. Chris is what is called a bottom feeder. Okay. He finds the deal and he snipes it, and then he gets his 20%, 30% kick, and then he's out of it. So the issue is, if you understand what you're doing in Disney, that's cool. That's what you're going to get out of it. Okay. But if you want an actual growth beast who is undervalued, and there's many of them, I would even say Amazon is undervalued. Okay. I would say you would get better return buying Amazon than buying Disney. I would say 100% you're going to get a better return buying Enphase than buying Disney, even buying SoFi than buying Disney. There's so many other better things to buy in the market. I don't know why you find extra capital to buy Disney, unless it's in your dividend portfolio and you're doing a dividend play because it's coming back in Q4 or whenever it's coming back. Then that's different because you have some money that's sort of treated like cash and you just want to make some return on it. That's
so you think in 5 years Disney's a dead company? It's gone.
Look at the last 10 years. I mean,
I'm asking,
guys. Yes, I think Disney.
Question.
Okay, so even if it doubles in 5 years, let's say that happens, it goes back to 160 and it hangs there. I don't think this is the company you want to be in long term. And honestly, waiting 5 years for Disney to double, like how many other companies are going to double in the meantime? I'd rather just have it in Google. Let that double. We all know where Google's going to double. We all know Amazon's going to double in 5 years. So I'd rather have the clear, safer bets if we're doing that than buying.
Yeah, but that's an argument that's it's a bit unfair, because what we're talking about is a return to the mean, and then can they grow beyond that? Because you can say that.
Well, no. So if your bet is return to the mean,
I want to finish my point. My point is that if the argument that you're making is there's something better to put your money into, then you can say that, yeah, put all your money into SoFi because it's the lowest market cap and it has your greatest chance of returning the capital. That's not the question here. The question here is whether or not Disney, right now at its 2020, March 2020 lows, is going to stay at this level, or it's going to return to some sort of mean. Will they reinstate the dividend? Will Bob Iger start to trim the fat? And will they start to be able to monetize some of the assets that they have? They have a fuck ton of assets, this company. And if to think that this company, this juggernaut of a company, is going to cede ground to companies like Netflix, I don't think that that's realistic over the next, say, 10 years.
10 years. Oh my God. Okay. So I agree with you, by the way. This is a value play. That's what I said in the beginning, that it is undervalued. It's going to move up, whatever that moves up to. But the point is, I did not say spend all your money in SoFi. I'm saying if you want the same return or better, go ahead and buy Amazon.
Well,
go ahead and buy Google.
But you can say that about
Google is growing
stock.
around 20%. I think it was double digits. I forgot what it was exactly. 17, 18, 19, 20%. I'd rather buy that and have that double on me than own Disney.
But do you understand that you can say that
about a value play?
You understand that you can say that about any stock. You're comparing, say, a media company, a media conglomerate, to a search engine, or to
how much Disney are you buying? That's the question here, Carlos.
Say what?
How much Disney are you buying?
Me? I'm looking at some long calls, and that's not the point, because I know what the argument you're going to make. This is just a fundamental question about the company. This is not saying about me personally how much money I'm putting into the company. This is saying, is this evaluating a company and whether or not you think it's a good investment. right?
So, Carlos, let me ask you this.
There is a value play to be made. I agree with you here. There is money to be made on the table, but you do not need every dollar. Every dollar is not
But
the
again,
same.
these
Let
are
me put
arguments
this.
you can say with any company, and so I don't.
No, no,
think
no,
they-
no. This
they-
is a clear value
they-
play. It is clearly hitting
You
bottoms
can say that
of the
about
last
any,
5-10 years.
but you can say that
But if
about
you look
any.
at the chart over the last decade, this is not a good company to be in the last decade. It is not. This is not something I'm making up. Just look at the chart of it.
I'm not. We're not talking. But again, we're looking forward. We're not looking backwards now.
No,
This
you
is
have to
what-
look backwards
no,
sometimes
no.
because
What I'm
Bob
saying-
Iger was there. He was there before
But what
2020.
I'm saying is, what I'm saying is, to make an argument that there's better places to put your money. Yes, I say that's a 5% consideration in the overall argument. We're not talking about whether or not if you have $100, do you put it in Disney or not? We're saying if you want to invest in Disney, what do you think your expected returns are going to be? That's what the question. That's what the debate is.
Okay, Steve, let's get you in. Go ahead.
Yeah, so the question that I have is what is their roadmap? And I would need to look more into it, but look at Marvel. They've done so many things Avengers has done. They really can't do much more. I mean, Spider-Mans are done, Iron Mans are done. Replacing Robert Downey Jr. as Iron Man, bad idea.
Yep.
I mean, maybe they redo X-Men. Fantastic Four, they've redone 2 or 3 times already. It's never taken off.
Yep.
Star Wars, where do you go from here? I mean, the cartoon's okay, but I don't know that you're going to really make more movies about it.
So you're questioning their intrinsic capacity to come up with content that is like Lion King-esque, because I think that type of Disney is gone from us.
Because the
That's what you
parks
need.
are
Yeah,
always
that's
going
what
to
you need.
generate money. It doesn't matter because it's a great destination that families are going to gravitate to. Because when you think about destinations in the U.S., it's probably the top dog. And it's going to stay that way, regardless if you go to Orlando or L.A. But my thing is, how many Frozens can they put out? How much more can they monetize Lucas and Marvel? And if they're generating these profits with all the media assets that they have, how do they increase profitability to generate better margins to get the street excited about it? I'm not saying they can't do it, and that's why I said I wouldn't be surprised if it was to go up 30%. But
Well, this is why
I don't think
I'd
it's
want to know
going
what they,
down.
what are they spend. This is what I want to know is are they spending their money on? Because that's, I think, the number one thing that they need to do above all is cut costs. Whether that means get rid of some of these dying assets, stop the licensing of all these of the stuff on Disney Plus that nobody's watching, and then start to ramp up monetization on the assets that they currently have.
Okay, so let's look at exactly what they're spending money on.
I want to point out, look, Disney Plus right now is, I mean, they have Hulu too. So as soon as they could incorporate ESPN, I'm not sure if you mentioned this, ESPN, Hulu,
They might
into
group them. Yeah, they might group them.
you probably, they are going to group them, and they should, because right now Disney Plus is useless to me as just as a father, forget about as an investor. And that leads to the investing part, because my kids never go on Disney Plus. They don't care about The Mandalorian season 3. They just don't. Okay. They don't want to watch another Marvel movie. They're sick of it. In fact, the only thing they turn on is Netflix. This is why Netflix is winning and showing you in their free cash flow why they're winning. So Disney needs to fix that first before I'm going to spend the $20 a month to get all of their services packaged, because at this point I have no reason to keep Disney Plus besides the fact that I paid for it for a year right now. So I think that's my real bear case, if anything, that the content sucks at this point. It's not good. The kids don't like it. The adults don't want to watch it.
I agree.
When it changes, that will be a better bull case. But no matter what, I still think as a value play, there's upside, because investors like to shit on stocks all the way on the way down. Now it's undervalued. It has some room to go up. Congratulations. It's going to go up a little bit. I mean, once again, I'm not a bottom feeder. I don't need to catch every single falling knife.
Can you just share this real quick?
The littlest good news is could move this stock.
That is also true. Real quick, George, thank you for this. He says the biggest argument against Disney recovering is that Iger made the decisions that got them here. They will sell a lot of assets in the near term, which might end up not be good for the bottom line as well. Go ahead, Carlos.
Well, this was, I think, a huge part of their problem over the last couple of years, as we had to pivot from COVID, which Larry Fink is now walking back and saying he's now ashamed to be part of the ESG political debate. This was someone in one of our chats mentioned this. BlackRock CEO Larry Fink said he's no longer using the term ESG because it's been politically weaponized, and he's ashamed to be a part of the debate on the issue. Well, why this mattered? This was a driving factor behind a lot of what the companies have been doing, trying to get this good ESG score, a lot of this diversity and inclusion, including in the type of content that a company like Disney would put out. The worrisome part of this is a little bit later, where he talks about, where is it? Let me just look it up. Capital. Yeah, they were talking about blasted by conservative as woke capitalism. Now the new term is supposed to be conscious capitalism, which has its own set of issues. And we can talk about that on a future podcast. But the idea is that now I don't think that these companies are going to be pushing for these high ESG scores in the same way that they were before. And apparently they are cleaning house on a lot of the people that were responsible for some of the shitty content that we've seen the last few years. Basically, there's been a gap, right? You get the kids when they're real young, 2, 3, 4 years old, then you miss them that whole time that they're Vitaly's kids' age. And then the parents who grew up with Disney are the ones that want to go to the parks. They need to capture those people in the middle and not lose them after they're toddlers and wait till they become kids. And then there's that nostalgia, right? You want to get them watching shows, going to the parks, going to the cruises, staying at the hotels, right? And then having their own kids and grandfathering them in. That's when you complete the
That's a
cycle.
valuable point you brought up, by the way, because my kids are not interested at all in the parks. And we talked briefly about it, but they don't even really understand what Disney World is like. When we grew up, we understood what Disney World is. So these are all negatives. These are long-term negatives for Disney that once again, you can make a little bit of money, but is this the place you want to be?
Yeah, and I would
All
say, before we get to this, I would say for Tally to go a step further, because you've said this on previous episodes, and I agree 100% with it. When you think about how live content is going to be in the future, it's not going to stay on a screen. They're going to get to a point. Apple is the best company at innovation for devices. It's not going to be goggles. They're going to have sunglasses you put on. They're making a deal with the NBA. They're in talks with their commissioner. They'll probably set up something at half court and near the hoops and above. And they will probably sell a season ticket, or each of the teams is going to do an individual pass for VR sports content. They're going to, once the NBA does it, they'll do it for football. They'll do it for baseball, all the major leagues. The teams will generate more revenue because now they can sell virtual season passes and everything else. And all of cable TV is going to be taking a hit. But for Disney, that's also time away from streaming, because that's something that if you make it cheap enough, a lot of people are going to do it. And
you're also going to see that with concerts, by the way. You're going to see
Live Nation's going to get involved.
Jay-Z's going to have the whole front row. They'll have these
Yes.
VR cameras. You can dial in, pay whatever it is. You know, you'll have the companies that offer the tickets, like Ticketmaster, and them. They'll give you like a season pass.
So their Q1 is right here where I'm waving the mouse, or I'll just highlight that.
Can you zoom in a bit? It's a little bit.
Yeah. So their cost of revenue in Q1 was roughly 2/3 of revenue. So to generate the revenue, so to run the parks and do everything, create the content, it's costing them 2/3 of what they're bringing in. And then your back office and your operating expenses are another 4.8 billion. So their operating income was, I don't know, what is that? 8%, 9% in Q1? I mean, they spend a lot of money to generate the revenue. That's why their gross profit is not great. That's what they got to fix. You got to fix the cost of revenue.
And is that a 2-quarter thing or a 3-quarter?
No, it's just
Can you make it big? Can you make it bigger? I feel like I'm at the eye doctor and they're asking me to like close one eye and read the bottom line.
So I'll do it on a TTM basis.
I got to make my own screen bigger. Can you guys see this? Even in the chat, can you guys? There we go.
All right. So
That's better.
For the trailing 12 months, their cost of revenue is 58 billion and total revenue is 86 billion. I mean, that's huge. I mean, that's a gross profit of what, 32% or so? Like, that's not great from a gross profit level. And then you have all your admin expenses. I mean, their profit margin's under 10% for a reason, or right around 10% for a reason. And then you get into taxes and everything. So can Disney, look, if Iger comes in and cleans house and does what he needs to do and fixes his margins, this stock could go to 150 in 2 or 3 quarters. I'm not disputing that. I'm just saying, show me a plan to get there, because right now, Disney has not shown me anything from their 2018 year. It's been a spiral downhill, and I don't know that that's a ball that you can stop rolling at this point. Like, I would not be buying here. I would rather lose some profit and see the story develop. And if they get above, where are they at now?
85.
89.
On that point, because I do have to go pick up my kid. That's why I wouldn't buy shares. That's why I would either do call options, 2-year leaps, or long out call options. I would do and I would do spreads, but I wouldn't hold the shares. If they do reinstate a dividend, I would see that. But I honestly think that this, like you said, this stock would go from where it is now up to 150, 160 bucks. And I want to be out.
I mean, I'd want to see it at 105 before I even thought about purchasing and reevaluating everything.
Right.
But even if they reinstate a dividend, I'm not excited about a 2% dividend. I'll throw my money in Altria Group and get 8.5%, 8.25% free cash flow machine generating $8 billion plus annually. They're buying back shares. They're increasing the dividend by mid-single digits year over year going forward through 2028. I mean, there's just better dividend plays.
Okay, bull case for Marlboro, everybody.
I got an article coming out about Altria.
real quick, and then I'm going to jet. This is what I'm looking at. Again, the long-term trend. So we did run up a bunch and we've come back down a bunch. I'm looking for something to revert somewhere to this mean, which puts us somewhere around 100.
But unless that makes a V-shaped recovery, it may not have bottomed yet.
What do you mean?
Like, that's not an established bottom on the chart.
Oh no, I'm not saying it is, but when you look at just the historical levels, it has had a lot of support at these levels. So there's going to have to be some awful news on the 3 weeks from now when they have their earnings. There's going to have to be some awful news right now in order for it to.
No, I actually think it's
level.
bottoming. I think I agree with you, Carlos. This is bottoming. This is
be.
not. It's low downside right now.
That's how I see it. That's how I see it too. They would have to be some real negative catalyst or something that they hear on an earnings call that go, this stock is just absolutely going to shit, because just from the loss of the dividend, everyone that wanted out of this stock is out of this stock right now.
Yeah, my only point was not that it's not going up. My point is that there are better things out there. That's it. But again, me and you both know there are better things.
I know, but again, you can say that with any stock. At the end of the day, you can say that with any stock. I mean, all you got to do is just say, what is the market cap and what is the potential multiple?
Unless you have hold on. Unless you have a real bull thesis for Disney where you feel like, okay, I got this. In 10 years, we are going straight to the moon. This is what's happening. No, I think everybody here is looking at it as a trade. Nobody here is looking at it like this is a company I will invest for a decade with. And I'm not that kind of investor. I do buy obviously some calls here and there, but 99% of my portfolio is in 2 companies, basically. Okay, that I invest for the long term.
Right, but that's and me too. I mean, I have like 3 to 5 main plays, and this would be something where again I would only play options on this thing because I don't want to hold those shares.
A bit of gambling is always okay.
I would limit my outgoing capital on the chance of an outsized bet. That's really what it would be.
In fact, I would do something that I do think is a bottom. If I was to do something, I like doing the synthetic longs because they offset the purchase price, because I do think there's a bottom happening here.
Some puts right here.
Steve, I do believe if you sell some puts, Steve, and you're aiming for like a 70 strike, this is pretty low for Disney. So you can offset the call side and basically get cheaper calls.
Yeah, and I could pull up the calculator that I made and we could run the numbers. Like, yeah, that could be interesting. But to your point and what I said earlier, I just don't know that the capital is worth locking up in anything with Disney.
Well, I think you hit the nail on the head there by saying locking up the capital, right? Yeah. If I had $1, would I put it into Disney or put it into Enphase? Into Enphase, obviously.
If I'm going to sell cash secured puts on this to generate 2% on my cash in a month, that's the number I like looking at, 1.8 to 2.3% over a month. If I'm locking up cash, then I'm not going to touch it. Forget rolling it or anything else. Let's keep it simple. Do I want to own shares of Disney at 70? Or would I rather sell puts on Palantir or SoFi that I actually do want to own more shares of? Or Google, which I would love to own more shares of.
But again, if we start doing that and comparing it to the other options, I mean, it's like what Jackalope was saying, that we're not asking if Disney is the best option right now. If you don't have any Enphase right now, why are we talking about Disney, right? If you don't at these levels, why are we talking about that? Even Innovix. If you don't have any and you believe in that sector, why are we talking about these stocks? But it's just more about is it something that could get you a yield? So how much, and how much of your portfolio allocation do you want to allow?
It's something that's interesting, but at the same time, I really do think the magic may have left the kingdom, and they need one or two.
You got your Dan Ives. You're channeling your inner Dan Ives right now.
Can you change the title right now? The magic may have left the kingdom.
Magic.
I can't steal a Seeking Alpha title. That's a good title.
No, I'm not going to do an article on it. You can use it. I'm not doing it. I decided not to. But no, seriously, I need 1 or 2 quarters because I'm not convinced that.
Hold
they
on,
are
hold
going-
on. Even if you're convinced in 2 quarters, I mean, honestly, is it something you care about to
No,
waste
I
any money
mean,
on?
Look, I want to make money, right? But I don't know that this is where I'm going to make the money. I think PayPal's a lot more interesting right here.
Disney
Yep.
doesn't feel like Meta at 88 or PayPal.
No.
At 50.
No.
You know, that's the difference.
In fact, I
No.
bought more synthetic longs today, and I posted it.
I mean, I'll
more
tell you,
synthetic longs on
Disney at
PayPal.
50 would feel like Meta at
Insane.
88, something like
All right,
that.
Carlos,
All right,
I know.
well, I'm
before,
gonna go pick up my kid. Maybe I'll be bringing back the fourth member of the finance checkies. If you guys are still on when I'm back,
before you leave, real quick, shout out to Robert for the $49 super chat.
he's not wrong. I mean,
TSL.
he's not wrong. That stock pays. That's an
TSLY.
options. That's an
Oh
option.
yeah, right. It is an option.
What is that, a
Options ETF
3x
based
on
on
Tesla? What is
yeah,
that?
it pays, bro. All right, I'll see you guys maybe in a bit.
Later, Carlos.
Bye, Carlos. He also says, "I love you, Kelly." So shout out to Kelly. I believe that
Okay.
is her boyfriend. So
I
thank
mean,
you for making me
look
money.
at like this
Yeah,
too.
keep paying us $50 to tell her
Keep
I
paying
you
us
love her.
$50 for telling you
Yeah.
love her. That's not
We
enough
don't mind
love.
at
To be honest,
all.
$50 is not enough love, in my opinion.
Yeah, I
Well,
think
look,
100. You
think
should put
100.
100 right now.
Tech
That would make more sense.
drives markets. Tech has driven the market. It's going to continue to drive the market. And there's less of a chance now than in other periods that the top companies are going to change. The balance sheets are too strong. We've never been in a period where companies have had $100 billion plus in cash on the balance sheets. And to say that Google is going to fall out of the top 5 market caps is kind of crazy to me. To say
Who's saying
Apple's
that?
gonna fall
What-
out.
what
No,
imbecile is saying
just
that?
saying. I think that these companies are going to continue to drive the markets. You have a setup on the macro level that's setting up pretty well in 2024 right now. You have the Fed, which is going to cut in 2024. You have lowest unemployment in a long time. Consumer spending's up. And when the cost of capital goes down in 2024 and 2025, you're going to get business expansion. They're going to be spending money with Apple, Google, Microsoft, all these companies. I mean, tech is going to continue to lead the way. I'd rather put my money in Google, PayPal, those types of companies than Disney. Disney's just not interesting right now.
Woo.
Rob, I don't think you love Kelly enough. I'm still not
Yeah,
feeling the
Rob.
love, bro. I just
We don't feel it, baby.
For some reason, I don't feel it yet. Not
I'm
yet.
looking at-
Maybe after another one, I'll feel it, but not yet.
So I'm looking at earnings, estimates, and estimates can change. Sales growth, and it says current year they're going to grow 6.7%, and next year they're going to grow 5%. They're going to grow less next year when it's supposed to be easier. But all right, whatever.
Can we transition to Amazon? Because this is a big position you both have.
Oh.
And Steve, I want to get a little preview.
I'm
What are you
scared.
feeling for Amazon going into
scared.
earnings?
You're
Why?
scared?
Why are you
Why
scared?
I'm
terrified?
scared.
Why?
I'm not scared.
Because Amazon always scares me because you never know what you're going to get. You just never know. That they're the wild card. I mean, let me go back.
I mean, look, I know you can talk about earnings. I actually have not looked what's going to happen this quarter, but in general, Amazon has a spigot, and eventually they're going to turn it. That's what everybody knows.
Wait.
okay?
What, a spigot is, does water come out of a spigot? Is that what a spigot is?
In this
What
case,
is a
it's
spigot?
cash. In this case, that spigot has
Okay,
cash.
Okay. Saying
Yeah, so
Amazon makes people wet with cash.
Look, we want Amazon to invest in the future. They need the infrastructure to obviously be number one. Even right now, like I keep thinking about monopolies, and every time I look, like I just had like
Can we
30
think about
Amazon
that?
deliver. I had 30 Amazon deliveries in the last week. Like I'm setting up the pool. I'm buying all this crap. I bought a gazebo on Amazon. I bought the umbrellas on Amazon. Today I saw a tractor trailer on Amazon. I was like, I might need a tractor trailer. No joke. I posted it. I posted it in Discord or on Twitter somewhere. That Amazon is literally the place you go to when you need anything. Okay. And I don't think about going outside to Walmart. I don't think about going to Target. I don't think about going to those places. I don't have time to go to those places. I'm going to go on Amazon and I'm going to lay in bed and I'm going to shop. Okay. That is the American way. And that's why Amazon's going to win.
Look, Vitaly's right. I'm in New York City, and I will tell you, all you see is Amazon packages getting offloaded on the trucks. That's all you see. Vitaly's in New York City a lot. He can attest to that. It's not bullshit. Like, that's all you see is the freaking Amazon trucks going up and down the road and just massive amounts of packages being unloaded. And when I go downstairs, our package area, I would say 60, 70% is Amazon packages. It's crazy. So here's why I'm worried.
Well, let me ask you a question before you. This is a valid point you're making. When I look at the trucks passing by, the UPS trucks, the FedEx trucks, and the Amazon trucks, it's the Amazon trucks that are winning in terms of passing by my neighborhood.
Definitely.
This is a big sign to people. It's not Walmart trucks. It is not Target trucks. You got to think what's happening here. Amazon has taken over logistics, just like Uber has taken over logistics. Is
They
a
have
monopoly
the
for
best
that.
supply chain behind the Department of Defense.
They are the ones taking this over. And on top of it, they're the cheapest motherfuckers who offer you space on their servers, and then we'll do AI on top of it.
Yeah.
On top of that, they are selling you shit because you go onto their website to actually buy stuff, and then they will have advertisers pay to be right in front of you that are on their store. And now they're printing bank doing that. It's like the number of verticals this company keeps coming out with is amazing. Absolutely.
Yeah, so there's two things that worry me. One is North America, because Q1 was the first time in several to many quarters that they were operating positive. They generated 898 million in operating income. We've had inflation come down. If that number does not increase, that's a problem. I'm expecting that to increase. International, they continuously lose money. I'm very annoyed at that. But Lena Khan, has anybody read her dissertation from law school?
No.
What law school did she go to?
Yeah, I sent you the link in the text message, I think. Oh, no, I sent it to my
Did you read it? So
I've read it. She's got a
TLDR, baby.
hard on for Amazon. A freaking hard on. Admit, I'm sending it to you.
Wait,
And
do you know what school she went to? Harvard, Stanford?
yeah, she went to Yale
Yale.
Law School. Hold on.
Yo, why do Yale law school people feel like they have a stick up their ass? Like they're all so uptight and uppity and like.
I bet you anything she's ordering on Amazon. I bet you anything.
100%, bro. All these fucking elite law school Ivy League kids, bro. They're so out of touch with reality. Like so out of touch.
Sure.
I got to leave within like 5 minutes, by the way.
Okay, it's okay.
This is very important.
You're doing the private chat or the email?
Well, just give us the TLDR. We're not going to read a report.
Yeah, no,
right now.
She wrote a huge dissertation about how this is a monopoly. Like huge. I'll leave the link so everybody can read it. I'm not going to waste everybody's time picking through it. But they lost with Microsoft. Maybe they appeal, maybe they don't. I don't know her. If I had a bet, she's gearing up to do something with Amazon. And many people have said Amazon's a monopoly. Amazon's not a monopoly. Got news for everybody. Walmart generates more revenue than Amazon. Amazon does not have a monopoly in consumer goods. Amazon does not have a monopoly in shipping. You have the United States Post Office, you have FedEx, you have UPS, you have XPO, you have DHL, you have all these other carriers. They are not a monopoly in cloud. They have 33% of the market. That's not a monopoly. You got Google Cloud, you got Azure, you got IBM Hybrid, you got Cisco, XYZ, Alibaba. They are not a monopoly in any area. Entertainment, Amazon Prime's not a monopoly. You got Netflix, you got Warner Bros., you got Disney. Show me how Amazon.
Okay, so look, I would agree with you in terms of when you compare one thing to the when you just say, okay, Amazon retail does not have a monopoly compared to Walmart. I agree with you when you just say that, but when you combine all of them together and you add Amazon Prime to it, I am stuck in a monopoly. There is no way that I will be forced out of that. I will pay them the $150, the $200. They can raise it, whatever. That is monopoly power. When you can raise a service up and I don't care about it because you're so important to me, that's a monopoly. Whether it's 33% or 20%, whatever you want to say of the total market, that's just not the way it works. It's a different time we're living in where they are literally monopolistic over the entire world. It's not just the United States. It's the entire world where they have 33% cloud.
But their monopoly
that's a big thing.
Not allowing other companies to compete, and they are still competing and still being profitable.
So once again, I even had my wife is a seller. She used to sell things on Etsy. She tried Amazon for a while, and she actually left it because they are a monopoly. They controlled her whole product cycle. So you have to send the product to them if you want the proper pricing. If something happens, you can't deal with the customer directly. You have to go through Amazon once again. So they had all of these things.
They take a transaction fee, a traffic fee, a shipping fee.
Holding your product fee. When you get to return it, when you got to send a new one, they have fees on top of fees for all of this stuff. She actually had to leave because it was too many fees. But she could do that because she was in a niche business, which allowed her to do that. Okay. If you're selling some trinket and you're not on Amazon, you're fucked.
So right? Tyler, let me ask you this. If they spin off cloud as cloud AWS as a separate standalone company, does the parent company, is that even interesting anymore too?
It is to me.
Okay.
I still think the logistics, everyone ignores logistics. Like they keep saying, well, Uber's monopoly. Where's Uber? Yeah, they control the whole fucking logistics of all people getting anywhere. Okay. At some point, that's valuable, right? The network itself at some point is super valuable. So they're building out this massive, massive network that Walmart and all these players will not compete. So, but I'm not fighting for them not to be a monopoly. I'm saying they are a monopoly, which is why I'm investing in them. So I'm not actually saying this is a bad thing for me as an investor. In terms of a customer, maybe it's good as a customer, but I see as a person selling products, it is really bad. They're a monopoly. They're a clear monopoly.
Yeah, I've never sold products on there. When I look at it just from the different business competitions, they're not making where anybody else can't compete, and there are other options. If they spin out AWS, their parent businesses are losing money. And I don't know that I don't know if it stays the same investment in my portfolio if they get broken up or if something gets spun out. I would have to really think about that because AWS has carried profitability. Now, if they blow earnings out of the water and the spigot gets turned back on with free cash flow, I mean, look, Amazon spends $60 billion a year in CapEx. They spend more money than Microsoft, Walmart, FedEx, and UPS, I believe, combined.
That's because, once again, they're growing out this massive network. As soon as they stop doing that and they drop the CapEx by half, all of a sudden you have $30 billion straight to the bottom line.
Huge. And if that can happen in the next year, I mean, this stock could be so undervalued.
I think it is undervalued.
Why?
I don't care if it happens next year. The point is that you can give them 5 years to do it because as soon as that happens, you are so undervalued. You are easily doubling, tripling, possibly quadrupling.
And when you think about how much cloud is going to grow in that period also, and they're going to continue to grab
their ad business,
all new revenue and the ad business on the platform. Like that's why Amazon's a big position for me because of the flywheel going forward.
Yes.
I think the real question here is why does the word spigot sound so sexual?
Amit always helping the conversation move along. Okay. For those who don't want to buy Amazon, they didn't buy it at 85. They're not going to buy it right now, so it doesn't even matter. And the ones who are bullish on it,
Vitaly, you think it tanks on Thursday, or?
Oh, I don't give a shit. I hope it tanks on Thursday. I was buying it a lot, heavy at 85, 95, 100, 105. I even recently I bought, once again, I do these synthetic longs because I get to push the price of the calls way down. That's why I do them. And even did that recently, I think a month ago, 3 weeks ago. I'm ultra bullish. Amazon is a word. It's something I cannot live without. If anyone here, we should do a poll. Who can live without Amazon? Can you just quickly do that at the end?
No. I mean, I'll give you the
do a poll right now. Who can live without Amazon? That's the question.
For me, it's no, because if I order something in the morning, there's a halfway decent chance I'm going to have it in the afternoon.
Yeah, I cannot live without it. No joke.
It's the supply chain's amazing.
I got the toilet paper that I'm going to use in a 20 minutes from Amazon. So
why are you guys on? Okay. All right. Steve, you think they tank on Thursday or no?
You got your poll going?
Look, I think they're going to beat it.
Where's the poll? Where's the poll?
It's there, bro. It's there.
I mean, inflation came down quarter over quarter during Q2, and that should alleviate some of their costs of revenue, which should make their margins better, which should drive North American income, which I think they beat earnings, and I think they go up. If they don't, if somehow they miss, I think they go down 10, 15% in a couple of days.
Does that matter?
Probably.
Doesn't matter.
No, it doesn't matter because I'm not buying it for the next week. I've owned Amazon for like 6 years now. Like I was buying it at $950 a share.
This is the point why Disney is a bad investment overall, because like if you have no faith or conviction in something like in Amazon, it goes down, I buy Amazon. That's what happens, right? Google goes down, I buy Google. Enphase goes down, I buy Enphase. Disney goes down, what do I do with my shares? And that was the whole Peter Lynch thing. What do you do?
Yeah.
If you have no conviction in something, you're in it for a fucking trade, you want your 2x, and it went down 20%.
I mean,
you're going to sell out because you have no conviction.
I would rather AT&T than Disney right now. And AT&T's chart sucks, just like Disney's chart.
And both are value traps at the end of the day, in my opinion.
Yes, the difference is I'm going to get paid 7.5% from AT&T, and they're generating $16 billion free cash flow, and they are actually going to pay down debt over the next couple of years, and the margins will look much better. So if I got to pick one value trap, I'm picking AT&T over it because guess what? Everybody needs a freaking cell phone, and you're either going to T-Mobile, Verizon.
AT&T is at where it was 30 years ago.
Yeah.
Today. That's kind of
Yeah.
crazy, bro.
By
It's
the
a-
way,
it's been a horrible
look
stock.
at the chart of Disney. 10 years ago, it was here. Okay, so
You got to pick one or the other. At least you're getting 7.5% from AT&T, and
That's
their
true.
free cash flow is crazy.
The poll says 60% yes, 40% no.
I think the
So-
40% are trolling.
I
If
think
I-
they're
I-
trolling
I-
too. I think they're trolling.
I would bet you anything if those
It'll be
people,
where
their
they live.
Amazon got taken away, they would be royally screwed.
It
Royally.
could be where they live too. I mean, look, you and I and Amit, we're in areas where it's definitely.
Vitaly's in the middle of nowhere. Let's.
I'm in
It's
the
New
middle of nowhere.
Jersey.
He's literally no. I've been to his. It's like literally in the middle of nowhere. It's like 17 million trees and then a little house that's Vitaly with a bunch
Love
of
A
that.
Teslas.
little house? What?
Little house, a bunch of Teslas, big ass pool. I'm like, where is this house?
A bunch of Teslas, a big ass pool.
I'll tell you,
Tesla.
I'd rather buy Tesla here than freaking.
Yeah, you
Disney.
know what we should talk about another stream, by the way, Steve. I kept
Yeah.
saying in the chat yesterday in your pod with TJ, Sedge, Solar Edge, which I want to buy, by the way, now that it's tanking. Their price to free cash flow was astronomical. I mean, astronomically bad. That's what I meant to say. That was weird to see. I didn't actually look at those numbers, but
I don't
was-
know anything about the company. I'm happy to look into it and we can discuss it. And
You
do
had the Excel spreadsheet, and
Yeah,
I was
yeah,
like,
yeah.
and I was
Because
asking
Steve
about
Alford
that.
had it as one of Enphase's peers.
Yeah, but it's from the numbers you were showing, they are a very poor peer, and it seems like Enphase is clearly just like smoking them. That's what it
Yeah,
looks like.
Enphase looks like a great play. Like when you do the due diligence on the energy sector, I mean, anybody who thinks solar is going away is crazy. It's not going away. It's only going to increase its position. This is coming from somebody who likes oil and gas.
Are you buying
No.
Enphase right now, Steve?
Not yet, but I'm really warming up to it. I mean, I may sell some puts at 130, 135.
I've done plenty of that, by the way.
Like
Exactly
the
what you just
entry
said.
point now is very interesting and I would say very good for a long-term investor for the simple fact that, I mean, BP is projecting 4 or 5x in solar installs over the next 2 decades.
That's BP.
I mean, the U.S. government is expecting energy utilization from solar and wind to continuously go up, and the energy demand is expected to go up by 50% by 2050. We're going to need more of everything, and solar is going to be a winning industry. So yes, it's very interesting.
I just got a text from Rango, and he said Enphase 2024 PE is 20 now.
Wow.
So there you go, guys. Invest in Disney, please. You guys can invest in Disney. Me and Steve will invest in what's good. Congratulations.
Yeah, I mean, I'm.
All right, last question. Last question before we end the pod. Please ask the others. PayPal earnings tomorrow. Are investors going to be crying or laughing? All of us are in PayPal. What do you guys think?
I'll say real quick. At least I'm bullish that PayPal is going to surprise because everyone expects shit. Just like what is it? I forgot what Chris says. We're expecting Rizzo.
Beyonce, Lizzo, Beyonce. Yeah.
Rizzo, whoever we're expecting. So yeah, I think it's going to do well. And even if it doesn't, once again, I'm not buying it for the quarter. I have lots of shares. I have 25 calls. I have plenty of time for me to be right. I don't need to be right tomorrow.
That is true. That is true.
So PayPal's jumped like 20% since May, and it's still a fraction of where it was. I mean, it's market psychology at that point. Not everybody, many people remember this as $150, $200, $250 stock. So if it got back to those numbers, nobody would be surprised. And that's something that you need to take into consideration with a stock like PayPal. They generate a boatload of free cash flow, highly profitable. They have a moat. They have great margins. They're buying back shares, and they have a pathway to growth. I mean, if they come out with a beat tomorrow, this stock could go up 10%. I mean, from a long term, it's very interesting.
Look, I think
it's gonna do
PayPal's
well
one of
tomorrow.
one of the easier bets. To me,
Yeah.
it was always an easy double, and I've been saying it since $50, by the way, 58 or whatever it was at. It's an easy double. That's what it is. And it can go higher, of course, but I'd rather have that easy double than the other one we were talking about earlier.
I think PayPal's going to do well.
Definitely an easier thing to invest in than Disney for me.
And mentally, you understand what they're doing and why they're needed.
Yes.
I use it every day, too. I don't use Disney Plus every day. I don't use Disney Parks every day. I use PayPal almost every day.
Yeah, that's a great point. I mean, if you don't have kids, I don't have kids. I don't have Disney Plus. I'm not giving them any money. I mean, I don't know. It's just, it's hard to get behind right now.
Cool.
Yeah, I think PayPal's going to do well. The one thing is SoFi's at $10.07 right now. The market's tanking after hours because of this credit rating downgrade we got. So that might end up hurting companies tomorrow. Even if they do well, the whole market might just be shit tomorrow because of that.
But
So
once
No,
again,
no.
that might be the
If
one reason.
PayPal surprises and gives you good guidance, no, it's
They're
going
going up. You think they're going? Okay.
If they
fine.
surprise and give you good guidance. If they give you
the
bad
market can go
guidance,
down
it's
tomorrow.
going
You got
down.
Amazon and Apple reporting on Thursday. I mean,
Yeah.
if they do well, the market's going to go up.
Yep.
Okay. We also got Robinhood earnings tomorrow. That's going to be fun. I'll probably streaming that one live, and we'll talk about that. All right, everybody. I will be live in 30 minutes for Palantir Daily. So I'll be talking for an hour about Palantir at 9 p.m. And outside of that, we'll be back Finance Junkies tomorrow. Hopefully, Chris should be here. He should be good tomorrow, 7 p.m. Thank you, Steve, for joining. Really appreciate it. Make sure to follow him on Seeking Alpha. I'll put his Twitter in the description. See you guys tomorrow.
Later.
Bye, everybody.
Bye, everybody.